Assalamualaikum everyone. We are Team Meta. Today we are going to present our international business course topic. So first of all, I would like to call Omar Farooq Rakib to present his part.
Assalamu alaikum everyone. Myself Omar Farooq Rakib, ID 04. Now I am talk about the petrodollar system. Let's understand the background of the petrodollar system. So around the world, oil is mainly bought and sold using US dollars because every country needs oil and this creates a constant global demand for the US dollar. This is the foundation of the petrodollar system. Let's talk about origin post-Bretton Woods era and Saudi Arabia agreement and welfare security agreement. The petrodollar system began after the collapse of the Bretton Woods systems in 1971. Later it becomes official through an agreement between the US and Saudi Arabia. Under this agreement, oil was traded in US dollars and in return, the US provided the security support to Saudi Arabia. As a result of this system, oil importing countries must keep a large amounts of US dollar reserves, and this reduces the monetary independence of developing countries, as they need to focus on holding dollars to pay oil imports. Now guys, let's look at how this system affects international business. First is dollar dominance. Companies outside the US face exchange rate risk, and changes in US interest rates can strongly affect global trade and investment. Second one, there are debt and dependency problems. Many countries and business borrow money in US dollars. If the dollars become stronger, repaying this debt becomes more difficult, increasing the risks of economic crisis. And the third and the final one, there are geopolitical risks. US sanction can directly impact international companies. To reduce this risk, some countries are trying to trade oil using currencies other than US dollars. So, in generally, the petrodollar system connects business risks and with global politics. International firms must consider not only the economic issues, but also political and geopolitical factors when operating globally. Thank you everyone. Now I would like to call my next team member, Mahmudul Hassan.
Thank you, Omar Farooq. So my part or my topic is about Bangladesh Bank Heist, which was held in 2016. So the incident is considered one of the largest cyber financial crimes in the history. Mainly the hackers attempted to steal 951 million US dollars from the foreign exchange reserves of Bangladesh Bank. So later investigations linked the attack to the Lazarus group. From the investigation, we all knew that the group was associated with the North Korea. So basically the attack did not happen overnight. It began through spear phishing emails that were unknowingly opened by bank employees. These emails installed malware inside the system, so allowing the hackers to remain hidden for almost 1 year. During this period, they closely monitored how international fund transfers were conducted through the SWIFT network. So the success of the attack was largely due to serious security weaknesses. Mainly the SWIFT system was connected to the internet without a firewall. Low-cost routers were used, and there was no proper network monitoring or segmentation in the system of Bangladesh Bank. So this showcased the system vulnerability of the Central Bank of Bangladesh. So basically, the actual transfer attempt took place on 4th February of 2016. which was a Thursday night. So the timing was strategic as Friday is a weekend in Bangladesh, and the hackers sent 35 fraudulent transfer requests to the New York Federal Reserve, while most transfers were stopped and $101 million were processed and $81 million were successfully laundered through banks and casinos in the Philippines. Next slide. So now we can see the impact on international business and global finance. So firstly, the incident highlighted that cybersecurity is a core business risk, not just a technical issue. After the Heist, SWIFT introduced mandatory security controls, and banks worldwide increased investment in cybersecurity systems, uh, real-time monitoring, and employee training. So these directly increased operational costs for international financial institutions. Secondly, the haste led to a regulatory and compliance overhaul. So the global regulators strengthened anti-money laundering rules and payment verification procedures for international businesses. This resulted in slower cross-border transactions, so like higher compliance costs and stricter reporting requirements. Third, the incident damaged trust in emerging market banking systems. International investors and correspondents bank became more cautious, which increased risk premiums and affected foreign investment flows. So finally, the attack revealed the geopolitical dimension of cybercrime. Since the attack was state-linked, it showed how cyber warfare can be used as a tool of economic disruption, creating legal and political challenges across borders. At last, we can say, or key takeaways is a single cyber attack reshaped global banking security and regulation permanently. Thank you very much. I forgot to mention my ID. My ID is 28. Thank you. So now I am going to welcome my next presenter to present this part. Thank you.
Thank you, Mahmudul Hassan Ilam. Myself, Abdul Samad, my ID is 06. Today I'll be talking about the Venezuelan economic crisis and hyperinflation. Venezuela was an oil-rich country, but it experienced one of the worst economic situation and collapse in modern history. This presentation will explain what happened in Venezuela, why the collapses happened, and what we can learn from it. Next slide, please. From that crisis, we can see some major economic shock. And the first one is the economic collapse, and the second one is price hike, and the last one is money started losing its own value. And from that shock, we can undoubtedly see the prices of goods are become unaffordable, and normal economic activity was disrupted across the country. Next slide, please. So now we will be talking about the hyperinflation. Hyperinflation means where prices of commodity extremely fast and uncontrollable, and national currency losing its purchasing power, and money becomes unreliable, and people prefer the foreign currency instead of their own currency. And the last one is the economy begins to shut down because of money no longer works as a medium of exchange. And next slide, please. And now we'll be talking about why Venezuela actually collapsed. We can see several reasons for collapse. Venezuela heavily depends on oil export. When global oil prices crashed in 2014, the government revenue fell, and the poor management will be also responsible for the economic collapse. And excessive printing, when the management is not working properly, they are focusing on printing money, that they thought that printing money will be solving their problem. And the last one is the weak institution. The next slide, please. Impact on people from that crisis, from that economic crisis and devastating consequences. the impact of people, we can see the food shortages, medicine crisis, poverty and joblessness, and mass migration. Next slide, please. Lesson from the issue. From that, Venezuelans experience offers important lessons for us, like over dependence on one resource is risky, printing money destroy the public trust in the economy, strong institution, rules of law, responsible economic policies are essential to maintain stability. And Venezuela experience offers clear lesson. Over reliance on single resources is always risky. So for that issues, we must choose the different project to stable our revenue system and the economic system. Next slide, please. Now we'll be talking about cost policy choices. And Venezuela crisis was not the result of a single event. It was the outcome of repeated policy decision, focused on short-term fixes and not focused on long-term decision, loss of economic trust, and human suffering as an outcome of it. We can see. And in the conclusion part, I can say the Venezuela proves that economic collapse is not caused by lack of resources, but by poor policy choices, and the consequences are always human. And a strong institution, rule of law, and responsible economic can maintain easily this. Thank you so much, and I'm calling my next partner.
Thank you, Abdul Samad. Myself, Mithila Borua, ID 26. Now I am talking about the 2008 US housing loan crisis and its global ripple effect. The crisis began in the United States housing market but quickly spread across the world, affecting banks, economics, and millions of people. Now I will explain how the crisis started, why it became so severe, its international impact, and the key lessons we can learn from it. The crisis began with the rapid growth of the US housing market. For many years, housing prices continued to rise, creating the belief that real estate was a safe and guaranteed investment. Bank issued large number of home loans, often without carefully checking. As a result, the housing market became unstable and heavily dependent on risky lending. There are several major causes of the crisis. Number one is risky lending and regulation. Number two is global contagions. Next slide, please. There are several key factors made the crisis inevitable. Number one is lowest interest rate. Lowest interest rate encouraged people to borrow more money, increasing demand for housing loan. Second one is rise of subprime mortgages. There was a rapid rise in subprime mortgages, which were given to borrowers with poor credit histories. Last one is lending standards weakens. With minimal documentation and verification, this factor created a housing bubble supported by risky debit. Next slide, please. The crisis had severe global consequences. Number one is global bank losses. Many international banks suffered massive losses because they held US mortgage-related assets. Number two is fear and uncertainty caused banks to stop lending to each other, leading to a global credit crash. And the last one is economic downturn. Next slide, please. Now, the key lesson we can learn from it. The 2008 crisis taught the world several important lessons. First one is poor regulation can have devastating consequences. Second one is excessive leverage increase risks and amplifies loss during crisis. Third one is global financial systems are deeply interconnected. And the last one is international cooperation and stronger regulatory framework are necessary to maintain long-term financial stability. Um, in conclusion, the 2008 US housing loan crisis was not just a national failure but a global one. Uh, it showed us the danger of unchecked risk taking, weak regulations, and overconfidence in financial market. Thank you for listening. Now I am calling my next group member.
So, thank you, Mithila Barua. This is Shajadur Rahman Tanvir, ID 05. Today, I talk about the rise of BRICS and global tourism flows. So, first of all, BRICS includes Brazil, Russia, India, China, and South Africa. Over the last 2 decades, these countries have grown economically, which has increased international travel from to these nations. As a result, BRICS continue have a significantly changed global tourism pattern and international business. Show me the next slide, please. So, this slide shows the shift in global travel patterns. Most international tourists came from developed countries like the US and Western Europe. However, since 2015, BRICS countries have emerged as fast-growing source of international travelers. Rising incomes, a growing middle class, and a strong interest in global experience have driven the change. And the next slide is, please show the next slide. So you can see BRICS as emerging tourist destinations. This slide shows the BRICS countries are not only sending tourists abroad, but are also become popular destinations themselves. Between 2020 and 2025, investments in infrastructure and strong government support helped attract more international visitors. Next slide, please. So, strategic investment in tourism. This slide focuses on strategic investment in tourism. BRICS countries invested in airports, hotel, cultural attraction, and visa reforms. These investments improved travel facilities and made international travel easier. As a result, tourism growth increased and supported international business. Next slide, please. So this slide is most important thing is challenges and sustainability. Despite rapid growth, BRICS tourism faces economic uncertainty, political tensions, and environmental concern. Since 2020, many destinations have focused on balancing tourism growth with sustainability and responsible level. Show me the next slide, please. So the last one is reshaping global tourism landscape. This slide explains how BRICS reshaped global tourism. From 2005 to 2025, these countries become both major sources of tourist and attractive destinations. This created new opportunities for international business and strengthens economic connection between emerging and developing market. So in the end, the rise of BRICS has transformed global tourism flows by changing where tourists come from and where they travel. This transformation brings both opportunities and challenges for the global tourism industry. Thank you. Thank you, everyone.